please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Okay, that picture, it's a momentary show of strength and unity. But in the past, these have fallen apart. Let's see whether this holds even up to 2019. That's an important memory for the markets. But that's a medium-term memory. The short-term memory is entirely clouded by currencies. The tumult in the currency market is what dominated yesterday. Now, we don't know how much of it will remain. Dollar briefly rose above 94 mark. Let me tell you, it was 90 just about 6 weeks back, or 91. So that's, you know, a substantial jump that it has seen, almost 5%. It went up to 94.6 and is at the moment a little, okay, as you can see, 93, 95. The first victim, of course, was Argentina. Yesterday's victim was Turkish Lira. It fell by 5%, and the central bank had to step in a hurry and raise rates by 3 percentage points. That's what we did on, what, July 28 or something for 2013. To stop the stemming of the fall, to stem the fall in the Indian rupee. Now, just to put things in perspective, we are nowhere near our 2013 fundamentals. The current account deficit is half of what it was. The fiscal deficit is way under control, 1 percentage point lower than what it was at that time. But there is a huge pressure of FII selling bonds. They are, you know, you get this 200, 300 crore figure in equity markets. But in bond markets, the sale just in 1 month has been $4 billion. Yeah. So that's the pressure that we have to withstand. That puts yields higher, and that pushes the dollar stronger and the rupee weaker. We have to see, and of course today the equity market news may be a little under the cloud because of Tata Motors and Jet.
Yes, earnings, right? I mean, earnings across the board were not that great, especially some of these larger names. Of Tata Motors, of course, that's been under a lot of pressure. Both these stocks are at new lows, and the outlook is also quite weak. But yesterday, the kind of sell-off we saw in the market in the last 1 hour is indicative of perhaps the pressure that we could see in the coming few days.
That was clearly the
Lira
Lira pressure. Yeah. That was the Lira pressure. At that time, Lira was in turmoil. And across the board, I mean, DAX, CAC, all of them were down 1.5%.
Europe was falling at that time, clearly. But what about today? Anuj, morning, you know, are you getting a sense that we could be headed lower, or is that what the screen is telling you? Because yesterday, not only the frontliners, not only the you know, the sort of volatile stocks, but even the pedigree stocks started to fall quite a bit. Bajaj Finance, Bajaj Finserv, etc. Does that tell you that this is a market in which people are just ready to now sit on cash?
Morning, Sonia. This is something I've been telling you for 10 days now. So look, and first of all, Lira or no Lira, the market would have fallen yesterday. The market would have found a trigger. And you know, this montage that we showed, by the way, you know, it reminds me of this show that we had, the UK game show, The Weakest Link, where, you know, towards the end, the two weakest players would join hand to make sure the #1 player is thrown out. So that was interesting. I don't know what they were waving at. I mean, this is really interesting. But look, there are 2 or 3 points here. The market is in a bear phase, and all rallies right now are exit opportunities. Now, this does not mean that, you know, everything starts to fall apart. There are good companies, there are good numbers, and they are bouncing back as well. For example, today, IGL may do well, and a couple of other stocks may do well.
Jan Irrigation was a good set as well.
Jan Irrigation was a good set, but I don't know. I think the rally today in Jan Irrigation perhaps would be an exit opportunity. You'll have to look at individual stocks and see the market positioning. The FI data is indicating, and you know, when 5 or 6 days before the expiry, FI start to sell this kind of you know, futures in F&O market, this kind of data is there, that's indicative of something. My base case is today you have a, you know, bit of a rally because everyone is short. So a rally perhaps towards the 10,470 mark, which is the 50-day moving average, which is where you took some support yesterday. 10,470 to 10,500 would be the zone in which strong shorts will come in and will try to take the market lower, because this is a sell on rally market, and now 10,500 would act as resistance. Look, if you are in a bull market, what do you hope every morning? That you get a gap down because you can buy. Right now you're in a bear phase. What do you want? A gap up so that you can sell into. The 200-day moving average of Nifty is 10,330. That's the next logical support. It should go there. That would make market healthy. There's a weekly options expiry, so perhaps the bank Nifty could be a bit volatile. But a point here is that don't even try to dabble into stocks beyond A group and B group. I was just looking at some of the stocks yesterday, and some of the stocks held by some of the best mutual funds as well. There's no exit. You know, some of these stocks are trading 500 shares, 600 shares, 800 shares, and I'm talking about good quality, perceived good quality stocks. Right now is not the time to dabble into those mid and small caps. Perhaps you want to build portfolio in good quality stocks which are also falling because the market is falling, but this is reminiscent of what we witnessed in 2008. At least the broader market action is. So that way you have to be careful, and you need to have a big rally to scare the bears. 50, 100 points won't cut the ice. You need to have a 200-point rally to scare the bear. Otherwise, it's not getting scared.
Okay.
All right. Well, let's do one thing. We have a long day ahead. So let's tell you what our wise experts have to say as we head into trade this morning. Rhythm Desai of Morgan Stanley is our expert for the day. He says India is a likely outperformer in the coming months, supported by recovering growth, reasonable valuations and a low beta, albeit challenged by an election year, rising oil prices and higher yields. He says their Sensex base case is at 36,000 for June 2019, a 7% dollar upside from the current levels compared to 2% they see for the emerging market index. However, he adds this point forecast comes with a wide range of outcomes, given that this is an election year. He says that Morgan Stanley prefers large caps over mid caps. He likes banks, private, corporate and retail, discretionary consumption, industrials, domestic materials and software, while avoiding healthcare, staples, utilities, global materials and energy.
Okay, some money market views for you. Tirthankar Patnaik of Mizuho Bank says the rupee's downward trajectory continues on incremental negative news and sentiment on Sino-US trade wars. A stronger dollar globally and sustained outflows locally. He says the drop of almost a percentage in the last week makes it one of the worst performing currencies in the EM space, with the decline now at near 6.7% in 2018 so far. He adds crude at $79 per barrel and the continued rise in domestic auto fuel prices pose current account deficit and inflation worries for the market, with the bond market almost certain of a near-term hike in policy rates. He expects USD-INR to trade in a range of 69.25 in the near term.
Okay, Tirthankar Patnaik also says that bonds have more or less tracked the downward movement in the rupee, with the 10-year yield inching towards the 8% figure, barring market expectations of further open market operations midweek. He expects the 10-year benchmark bond yield to remain in the range of 7.8 to 8% in the near term.
Okay, over to Nigel then for the world view.
Well, the US markets, they recovered in yesterday's trading session. In fact, the Dow was up close to around 200 points from the recent lows. There was instability in terms of the trade negotiation talks between China as well as the United States. Now Donald Trump is looking at tweaking this a tad, but he says, though, that the talks are progressing quite well. So that was the reason that the Dow started off with a cut of around 100 points odd. But there were a whole host of stocks that were moving around. General Electric, that's part of the Dow that was down nearly around 7%. Now, the chief executive out there said that they're expecting no profit growth in their power business. So that stock was under some pressure. We had Target as well that was reacting to its numbers. The street wasn't too impressed. That ended with a cut of around 5%. While Tiffany, that delivered a good set of numbers. It ended with a gain of around 20% odd. Remember, towards the end of the trading session, the Fed minutes did come out. And in fact, the Fed said they're willing to let inflation run. We saw some strength in the dollar index. It crossed the 94 odd mark. And even we had the bond yields hovering around that 3% odd mark. Moving to the European markets, though, red on the screen. All the three frontliners ended in the red. Economic data didn't look too good there. Inflation numbers were a tad bit disappointing. Consumer confidence data as well was a bit disappointing. So that index, in fact, all those three frontliners were under some pressure. Italian index, they ended with a cut again. Political uncertainty weighs on those markets. So that's what went on out there. From the broader markets, Marks and Spencer's, though, that stock did quite well, was up close to around 6%. Emerging markets were under some pressure in trade yesterday. And as you all mentioned, the Turkish Lira did bounce up as well. But most Asian markets under pressure today. The SGX Nifty indicating a bit of a flattish start. Back to you.
Thank you very much for that. SGX Nifty at the moment has climbed up. But as you pointed out, the Turkish Lira was the talking point yesterday, tumult in the currency markets. The dollar index has lost a bit since yesterday's steep rally towards that 5-month high of 94.16. It's given some relief to emerging market currencies over the past 12 hours or so. But as we know, the Turkish Lira got punished badly and the central bank of Turkey had to raise interest rates by 3 percentage points. Ray Faris of Credit Suisse joins us on the phone line from Singapore with his take on the currency markets. Good morning, Ray. Thank you very much for joining us. Should we see continued tumult in the currency markets? Who's the next victim?
Good morning. Thanks for having me. I think the first thing to do is to note that the countries that have seen these large depreciations in their currencies have idiosyncratic problems that probably would have weakened the currencies even in an environment where the dollar was fairly flat. High inflation, large current account deficits, but particularly high inflation with dovish central banks. The dollar has rallied, and it looks like in the short term it could probably push a little bit stronger against the euro and some of the other major currencies, and that will probably keep the dollar rallying against emerging market currencies. But the move is now getting pretty extended, so we're beginning to look a little bit more for things that stop the dollar rally rather than things that kind of keep it going.
So, just to take my colleague's point forward, it seems to be a domino effect now. I mean, Argentina, Turkey, what next? And where do you see the rupee? Because rupee too has sunk below 68.
Sure. So it's not so much what next. As I said, the countries that are particularly weak are countries that had problems to begin with. And, weren't going into this dollar rally as particularly strong countries or currencies. You're right to say that the Indian rupee has depreciated, and that's in part because this rally in the dollar has come at a time of the year when India is particularly vulnerable. The second quarter of the year is the weakest part of the year from a seasonal perspective for the current account balance. There's very strong negative seasonality in the second quarter, and oil prices have gone up. So, India probably will see a weak currency persist for, another few weeks, maybe a month or so, and then that current account seasonality becomes a little bit more neutral. And it really, what kind of depends, what really matters then is the extent to which the dollar continues to rally and what happens to oil prices. Okay.
No, of course, Argentina and Turkey are not, they are the outliers because of their individual problems. But we also saw weakness in the Filipino peso. We saw in the rupiah, the rupee, and the real. All these currencies have also fallen substantially. All I'm asking you is, will this be something not as bad as 2013, but can it get a little worse enough to sound like a mayhem?
Okay, so whenever the dollar rallies against the major currencies, it rallies against emerging market currencies. It's almost like a law of physics. So the fact that emerging market currencies have depreciated at a time when the dollar is rallying against the major currencies is just the way the world works. Now, if I look at the Asian currencies, out of 20 major emerging market currencies that I tend to follow, and ignoring the Argentinian peso in that, the Asian currencies are in the sort of top 10, top 11 performers. They've fallen much less than the rest of emerging markets, and that sort of makes sense.
What about the dollar index? I mean, the U.S. bond yields, I mean, they went above that 3% mark for, the first time in, I think, 4 years or so. Are you worried that the emerging market complex will not be able to digest the continued higher moves in terms of, global funding costs?
As U.S. yields rise, it puts upward pressure on yields globally. That's true. Some emerging markets will struggle with that to a larger extent, where inflation is high and real interest rates are low. There will have to be a larger adjustment. That's not really so much the case in Asia. Most countries have much lower inflation today than they did in 2013, higher real interest rates than they did in 2013. Nonetheless, yields have risen in, say, India and Indonesia, but they're getting to levels that are, increasingly looking fairly attractive. So we would expect them to sort of start stabilizing.
Okay, just two very quick questions. One, where do you see the rupee by the end of 2019? Does it go even above 69? And two, given the scenario of currencies, will the Reserve Bank of India hike rates as early as June? Many people were actually expecting it in August.
Well, I wouldn't hazard to try to make a forecast for 2019.
No, 18.
2018. We've had forecasts for the currency to be around 68. It's a little bit over that now. We tend to think that the dollar will re-weaken in the second half of the year against the major currencies, and that'll help some of the emerging market currencies. I know that seems a little odd right now, but we think as Europe begins to recover, the euro will bounce. RBI is probably going to be under pressure to hike rates. Our view has been that they would turn more hawkish in June, and if oil remains high and the dollar holds this strength going into that August meeting, that they probably would hike rates in August. Okay. If the dollar rallies a whole lot and oil, shoots another few dollars a barrel higher in the next couple of weeks, well then, June could become more likely.
All right. Ray Faris, thank you very much for joining us. That's a calming voice, actually. He's not expecting mayhem.
Well, it's starting a brand new day, and after the kind of fall that we saw yesterday, one shudders to think what could take place today. But the SGX 50 is not bad if we follow those cues, that is. Let's see, a lot of stocks to talk about this morning. Our research team is here to give you the list of top 10 stocks for the day. So let's start very quickly. Anuj, what are you looking at?
So Sonia, but today you'll have to divide the day in two halves. First half could be good because of short covering. Second half could be interesting. Ultratech Cement hit a fresh 52-week low. The cement is in a bear market, and there was strong pickup in delivery volumes across the board. In fact, this is a cyclical play on the downside. And Balrampur Chini, sugar stocks are firmly in sell-on rally mode. Yesterday also it fell 10% after opening in green. That cycle has turned, and the stocks would make fresh lows before any kind of rally resumes here.
Well, Tata Motors has been in a weak run for some time now. Yesterday it ended about 2% higher. That gets wiped out, Sonia?
Well, I don't know what the near-term trajectory of the stock will be because, of course, it's fallen a lot, etc. But the numbers are not looking good, Lata. I just want to pull up a graph of, the JLR margins over the years and look at how much the margins have deteriorated over the past 5 years. At one point in time, they were sitting with 17-18%. Even if you adjust for Forex this year, it's about 11.5% or so. Significant deterioration there. Quickly, this quarter as well, margins have fallen. They have a new capitalization policy, which is good. They're trying to align themselves with global peers like BMW, etc. But this capitalization policy will reduce their margins by 100 basis points. They did mention that the demand outlook is very challenging in UK, US and Europe. The standalone margins, now just to tell you, this time they've done 7.5% margins despite the cycle being on an uptrend. Despite the likes of Ashok Leyland doing about 11.5% margins, they're still struggling at single digits. So that's another issue. And they've guided for a long-term EBIT margin for JLR at 7 to 9%. I don't know how they're going to manage that with no demand push.
Okay, so let's listen into the management. PB Balaji.
We've introduced a new capitalization gateway in our product approval process on affordability, which means even though if there is a business case that is valid, we will take it forward only if it meets the affordability gateway. And therefore, this changes will now come from FY19 onwards, which brings our overall capitalization down to about 70% for JLR and roughly about 60-odd% for the commercial vehicles business. In fact, it will be much lower than that, we expect, and the passenger vehicles are about 60-odd%. The EBIT impact of this is about 100 bips for JLR and broadly about 130, roughly about 70-odd bips for Tata Motors overall.
Okay, well, under the leadership of Chandra, they are taking some hard calls. This new capitalization policy is one of it. But let's move on. We'll talk in greater detail about Tata Motors. But Jain Irrigation also reported a good set of numbers, Sonal, this time?
Yes, Sonia. Well, revenue growth of around 26% is what something that the street would like at 2,778 crore rupees. Edelweiss estimated revenues of around 2,400 crore rupees. EBITDA also went up by 39% at 339 crore rupees. However, margins were flattish mainly because there were higher other expenses and also there was weak showing in the agri processing business. However, in the other two segments, there was strong growth. The plastic segment EBIT that grew by 200% and the agri input EBIT that grew by 17%. Based on all this, I expect the stock to be in green today.
Okay, so that's the good earning of the day perhaps, but the howler of the day was Jet Airways.
Yes, Q4 big loss coming in, 1,045 crores. No one really on the street expected this. There was an expectation of a profit this time around. You know, the revenue growth has also been lower than what the street was estimating. A couple of issues why the losses have piled up this time. Fuel expenses have gone up for the company by about 30-odd%. There was a big forex loss this time. There was a one-time maintenance charge they had to incur to the tune of 253-odd crores. And once again, the auditor has raised concerns about the company's ability to generate cash flows to meet its obligation. It's nothing new. Of course, the company is sitting on huge debt, but once again, concerns raised there.
And we are only, you know, south of $80, south of 75 for the last quarter.
Yes.
What happens when fuel prices increase? Okay, Rima, some good numbers, L&T info?
Yes, absolutely, Lata. It's a beat compared to street expectations on revenues and margins. The company's delivered a dollar revenue growth of 5.3% in Q4 in constant currency terms. It's a growth of 4.5% for the full year. It is above what the industry has delivered. Their constant currency growth for FY18 stands at 14.7%. Reported margins are impacted on account of a one-time settlement that they did. But if you adjust it for that, then the adjusted margins have actually improved by 100 basis points. So beat on revenues, beat on margins. The stock has done well so far this year with a 42% rally, but Kotak has gone ahead and further increased the target price to 1650 in the green for L&T Infotech.
Okay. Another day, another event, another bid for Fortis.
No, Lata, actually it's just an extension by Fortis, by Manipal TPG. So it's positive news for them. They've increased it up to the 6th of June. But separately, just want to point out that the board has made decisions to announce the numbers, Q4 numbers, by the 30th of May. Plus, they have clarified that SEBI is not probing them on insider trading, or they haven't heard anything of that front. It just goes to show that the new board, which is now left, 4 members, are rapidly taking decisions. So I'm sure that on a governance level, it will go down well with the street.
Okay. All right. And then there was this price hike that came from NMDC, which spoilt Nigel's holiday.
That's right. In fact, Lata, yesterday we had alerted our viewers that NMDC was going to be taking a price increase of around 100 to around 150 rupees per ton. And that's precisely what happened. Post-market close, they've gone ahead and announced this. Remember, in April, they had cut prices by around 100 rupees per ton. So this comes as a bit of a surprise. Some part of the street is factoring in some more cuts. So a price increase definitely is good news for them. Expect NMDC to open up in the green, while maybe the buyers, that's a JSW Steel that hasn't been buying so far, they could be under some pressure going ahead.
Okay, Nigel, thanks a lot for that. IGL's numbers look good, Sonal.
Yes, Anuj, you know, well, the Q4 was good basically because of margin and volume expansion. In terms of margins, it went up by 140 basis points at 21.4% versus a poll of 22.4%, but that was majorly because of higher other expenses. The CNG volumes, they grew by around 10% on a YOY basis and 2% sequentially. PNG volumes also grew by around 15% on a YOY basis. Overall volumes were up around 11% on a YOY basis and 2% sequentially. However, all the brokerages, they are very sanguine on the stock. ICICI Securities has in fact risen there, have upgraded the stock to a hold from reduce earlier, and CLSA also has a 53% upside on the stock, expected to open in green today.
Okay.
Yeah, thanks a lot for that. IGL expected to open in the green. But Rima, what about KPIT Technologies? How did it do?
I think on the whole quite good for KPIT Technology as well. Strong revenue growth. Their dollar revenue growth stood at 6.5%. This is the best that we've seen in the last many quarters. For FY18, they've ended with 14.8% in terms of revenue growth. The company is will be merging with Birlasoft, and after merging the two businesses, they will be separating or carving out or demerging the product business. So on account of this demerger, the company has taken some one-time expenses in Q4. If I adjust the margins for that, then they've gone up by more than 200 basis points. So looking good on revenues and margins for Q4. For next year, the company is guided for an 8 to 10% revenue growth with margins in that 11.5 to 12.5% bracket in the green.
Okay, thanks a lot for that. Godrej Industries was a surprising disappointment.
Yes, yes, absolutely, Lata. You know, the revenue growth looked decent at around 18%, but they reported an EBITDA loss of around 30 crores rupees versus a profit last year, which was mainly driven by higher expenses. For example, employee expenses, they shot up by 36%. Other expenses shot up by 24%. Profits, however, grew 2 times at 277 crores, but that was mainly driven by a component of higher other income. Volume growth looked decent in all the segments in higher double digits, but even on a standalone basis, they reported a loss of around 48 crores versus a loss of 34 crores last year. Expect the stock to be in red today.
Okay. Well, that's Godrej Industries. Anisha, what about other stocks in news?
Well, yes, Anuj, I'll start with the MEP infrastructure, wherein the numbers were a bit mixed. There was a strong performance when you see YOY, but sequentially the numbers were a tad bit weak, because if you look at the revenue, that came in at 776 crores versus 756 crores in the quarter gone by. The company has separately approved the FII limit increase from 24% to 100%. Let's see if that garners any interest whatsoever. Moving on to Repco Home Finance, where the performance was not that great. I'm expecting a red tick on the stock. That is because the company reported lowest NII growth for the company ever, as well as the loan book growth is on the lower side if you look at the last 6-7 quarters. Rupa, on the other hand, reported very strong set of numbers because the revenue jumped around 10%, and even if you look at the gross margins, they expanded to 52% now versus 44% that they reported last year, so that should go down well with the street. Eros International also reported a good set of numbers. The revenue jumped 32% and the margins actually jumped to 38% versus 22% reported last year, so 1600 basis point improvement there. ENIL were a weak quarter there because revenue is down as well as the profit is down. Tata Power, where the company has signed an agreement with Tata Sons to sell around 7.5% holding that they had in Tata Teleservices, something that we are seeing in Tata Power already, so a green tick on that. Lastly, IFCI, no major surprise there because the net loss widened to 316 crore this quarter versus around 180 crore reported last year. Back to you.
Okay, thanks a lot for that. So that's a long list of stocks. Here's a quick recap of our top stocks to watch. Expected to gain today: JN Irrigation, L&T Infotech, Fortis Health, NMDC, KPIT Technologies, IGL, MEP Infra, Rupa, Eros International and Tata Power. While stocks that could be under pressure today: Tata Motors, Ultratech Cement, Balrampur Chini, Jet Airways, Godrej Industries, Repco Home Finance, ENIL and IFCI.